Hi, Monday, November 19th, 2018. I thought I'd explain some of my indicators up here, one at a time, one video each. I'll start with this one, the M of X. The M stands for monthly. The X is just the math thing I put in there, my fun thing. It's my January indicator. In my trading, I realized the first bar is always the most important bar in a chart for a period. The first bar, the first monthly bar, which is January, is very important. The first bar of the week, the Monday bar, is very important. That's sent to be my weekly low. If the market goes below that weekly low, whatever that is, whether it's on a Monday or a Tuesday, it's probably going to go a lot lower. I have a 15-minute low. That's what my 15-minute area is. I'll have up here my 15-minute candle, the high and the low. If the market goes below that 15-minute candle, it usually goes a lot lower, and I'll explain that to you too. But we'll start with the monthly January indicator, which is right here. In January 2018, the monthly low was 267.40 and the high was 286.60. And historically, this will help you if you're not a trader, even if you're an investor. This is this year. If you see, if it goes below this upper channel, the 286.60 area, it's probably going to go lower. So it touched it, it went lower. But if it goes below this 276.40 area, if I have it right, it jumps out 267.40 area, it's probably going to go lower as well. Not 100%, but a high probability. And through the years, this holds true. If you look at last year, 2016, if you want to know where to buy the SPY, it's the January high area. Here it is right here. The January high was 229.71. Then in February, March, April, May, June, it just kept going up. So if you want to know when to buy, a good month to buy is really February, and basing on what the January high is. If you look at the election year 2016, here's the high right here, 201.90. The market in February went down all the way to the January low, which is the 181 area. Then it bounced off of it, and you see as soon as it clears this January high, which is the 201.90, it was all clear sailings till the following year. Same thing here. This year was this particular year. 2015 was a sideways year. You see the first primary bar, and it pretty much stayed the whole year within that range. Broke below at one time. You see, if it broke below that low, it went a lot lower. Then it came back up and finished the year strong for the Christmas rally. November, December tend to be positive months. Then this particular year again, look at this one, 2014. It stayed above the January high, which right here was 187. And as long as it stays above the January high, it's probably going to go higher. And same thing with this year, this particular year, 2013. You want to know when to buy? It's the month of February again. As long as you want to know what price, you can buy the spiders at the high at 150.94 or 151 around here, and it rallies. But if it breaks that 151 area and it goes lower, you want to know what the cut loss would be? It would be the low bar, because if it went below it, it'd probably go a lot lower. And we can see that in the financial crisis of 2007, 2008 area. Now here's 2007 right here. It was a volatile year. It's this candle right here. The high of it was 144, and it stayed above it for most of the year in 2007. Then come 2008. This is the big 2000, the big volatile year where the market collapsed. It stayed within this January range. This is a huge range of the high of 146 and the low of 126. That's a 15% range. This is a huge range. And it stayed within most of the year until Lehman collapsed, went bankrupt in 2009. I'm sorry, 2008 in September. This is the September candle right here. And you see, as soon as it broke this low in 2008, which was 126, the Lehman event, it went a lot lower. So if you really want to know history of the spiders, it's all about the January indicator that month. If it stays above this first month, here's 2009 rally. The market, here's the January bar. In February, it went below it. But in March, it went above it, and you saw a really endless rally in 2009. So the best time to buy as an investor, and I keep this in mind as a trader, is that if I'm going to buy the spiders, it's in February at the high of the January candle. How does it help me as a trader? Well, in 2018, this price of 267.40 tells me that if the spiders goes right now, the spiders is at the close is 273, so it's really only 2% from that 267 area. So if it closes below or goes below this 267 area, it could be lookout below, and it could be, you know, something like this. I mean, it could be a bad month. It could be a lot lower. Like this could go down just like this, all the way down to the bottom of this channel. It's a possibility. But I keep that in mind. If that happens, the TVIX will spike. It could spike to $100. You know, so I keep that in mind. In that, you know, this January low, it's one of my indicators. As long as it's really above this low 267.40, I think the market has hope of closing the year within this zone right here. These two bars, the high and the low. But if it breaks below it, it's going to go a lot lower. You know, and that's what I think. So that's why I keep, that's one of my indicators, is that my monthly indicator, in that to keep the back of my mind in my trading, that if today, for example, that the spider drops 2.5%, it's going to go below this 267 area. That could be very bad, and this TVIX could spike to, you know, if it goes below the 267 area, it's probably going at least to $50. And if it goes a lot lower, it could go to $100, $120, as I showed in earlier videos. You know, that's why I keep that in mind. You know, anyway, that's pretty much it. I hope that explains this yellow MMX, my January indicator, so you understand what that range is. It's really the first bar to one. I call the primary bar. You know, and you'll see I'll do that over and over again with all my other indicators as well. You know, this is VIX Trader signing off. Thank you very much.